The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. I'm having a there. I can hear myself a little bit better now, but I didn't play the thing, did I? Because I got to find it. Here it is.
The following takes place between 2 p.m. and 3 p.m.
And what else do we have going on? Well, we've got a bit of a small bounce today. And, of course, being up 7-8 points, bouncing around this level. Not unexpected. 2865 is kind of where support starts to come in from the bounce before. Volume did accelerate into that level, though, last week. Now we're bouncing, and question is, what kind of energy are we going to get today? And that energy is going to be wimpy, wimpy, wimpy. 3.2 billion shares as we start to show off today. So we certainly aren't having a lot of people pile in as the markets go higher. I suspect that we could pull back all the way to 2,800. Yeah, news, kind of a market that's rather news driven. Good news could make that go up a little higher. I do think, though, that we do have one of these markets, and I've heard it called the paper cut market. That's those tiny little cuts, but they hurt. And if you draw blood, they seem to just be incredibly tough to get them to quit bleeding. You're not going to die from it, but it just keeps bleeding a lot longer than you would think. And my guess is that is the kind of market we have set up now, which is a long, slow retracement, maybe down as far as 2,800 on the S&P cash, maybe even a little bit more. We'll see. I dislike that Friday we had so many people trying to pile in. The big rallies that we've had off of pullbacks have all been when everybody got bearish. Well, if you look at both the short positions and the options positions, people weren't very bearish on Friday. Normally, when everybody gets bearish, that's the low, and then we go higher. Well, that's been the pattern for the last 8 or so years. We just didn't do it. Everybody is extremely complacent, and that's when sometimes you get what they call the frog boiling pullbacks, and that is where it pulls back slight and slow and has it just kind of lulls you to sleep. You're sitting on some big fat profits, and guess what? Those profits slowly evaporate. By the time you wake up, they're gone, and even people hang on for years later. Maybe I could bring up gold. How many people do you think bought gold at 1,800 are still hanging on at 1,200? That's been a fairly big pattern over market history, and that is the ability to buy at highs and throw the baby out with the bathwater at lows. Well, in the general or broad markets of the NASDAQ and the NYSE, I haven't seen anybody throwing anything out. Did we pull back a little bit? Did people kind of sell? I think the answer is true, but I haven't seen any kind of capitulation that makes me think that there's any bottom in before what I think may be, the last week of this month. There may be some reasons for it. I think a lot of it have to do with propaganda, both from the market and from what I would say used to be news and now is just thinly veiled hacks pushing their political propaganda on cable news of all sides, which I try to avoid. I try to read everything. I try to not watch anything anymore. It's pretty easy to quit reading something and move on to the next level when you find out that there's probably very little in it worth reading. Kind of like what? Cotton candy. It kind of just melts in your mouth. There's nothing there. And you know it's all a big lie anyway, or propaganda. So just try to avoid it. I think or at least I am going to try to avoid it as much as possible into the November elections. But just the shrillness of what I read over the weekend seems to me like, just going to get worse and worse. So we'll try that. So anyway, what else do we have going on? That's it. We got a bounce. Don't have much in the way of volume. It is Monday. We are coming up on something that will be big, and that is Apple. I suspect that everybody's going to be, at least from what I've heard so far, I don't see a lot of there when it comes to Apple. Options show a risk in Apple back to 205. And they've been pushing this thing for a while, and I'm not exactly sure why. Where this thing started to rally back around $200, I would not be surprised for Apple to come back into that level. None of the stuff that's been leaked so far suggests that anything would add to any sales. If that was it, I'd say the stock would go to $150. But Apple's done a fairly good job. In fact, I wrote about it in the Tech Insider maybe a couple of years ago. And that was that Apple kind of was already seeing that they'd gotten probably 90% or 95% of the customers that they would ever get. And the next thing to do was to adapt the Razor Blade and Razor marketing scheme, and or if you'd like to think of it another way, the Kirby vacuum cleaner, which is you sell a fairly decent product, but then you force them into your attachments that you charge confiscatory rates for. And that is kind of what Apple's done. They're getting rid of the earphone jack was one thing. Not a lot of people happy about buying $200 earphones, though. And most of the people I've seen just go without now. If they're in a car, they use Bluetooth, but it's still enough for Apple to get that extra money. And most of those, I think they cost $50 to make the earphones, and they sell them for $200, so pretty good margins. But then there was some more discussion about whether Apple would have problems in manufacturing. Everybody's kind of glossing over what I think is the end game for the Trump administration, and that is that now they have a deal with Mexico that he's not opposed to Apple building their products in the Americas, not necessarily in the USA, maybe South America. But I think he's really pushing for a hemispheric, or at least Americans, not so much USA, used interchangeably. But I think there's a reason why Apple's building all those places down in Texas.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. Let's do a little history, then we'll get on to some more of my ranting and raving. But a little history first.
And it's all just a little bit of history repeating.
On this day in 1897, 25-year-old London taxi driver named George Smith becomes the first person ever arrested for drunk driving after slamming his cab into a building. Smith later pled guilty and was fined 25 shillings. In 1936, though, Dr. Rolla Harger, a professor of biochemistry and toxicology, patented the drunkometer. It was a balloon device that you had to blow up, then went into another machine to determine whether or not you were drunk, like Otis. In 1953, Robert Orkston, former Indiana State Police captain, university professor, who had collaborated with Harger on the drunkometer, invented the breathalyzer. Neither one of these was sold in volume until Mothers Against Drunk Driving showed local hamlets, we call them hamlets, cities, areas, counties, how they could clean up by charging anywhere from $200 to $2,500 fines for drunk driving. And suddenly, in the late 80s, we saw that the breathalyzers flew off the shelf in record numbers for that. I only bring this up for one reason. That is, I'm kind of always in the back of my mind thinking about what products would sell in the near future. And now half of the people, or if not more than half, that are pulled over for driving while under the influence are under the influence of something other than alcohol. And that could be a monster moneymaker. I remember when Taser came out, and man, I think the stock went from like $10 to 200 or something. These things are either feast or famine, and there are a few of these devices swimming around. But if you find anything If you see any of these companies with something that is the akin to the breathalyzer for drugs, there are a bunch of people talking about them now, that they have designs and chips and everything else for them. Just look at it. The first 5 years, I think, going to be land, office, business. This stuff is around, or tends to be around for a while, and then there's a spark. That spark, though, for cities is can be half or more of their revenue is just drunk driving convictions, because most of the people that they pull over tend to have some cash and don't want to go to jail. They're more than willing to spend the $2,500 to stay out, and as long as there's some money in it for the local city, they seem to be more than willing to get involved. Call them about a lot of drunks hanging out and sleeping on park benches. You don't get a lot of action. You tell them that maybe they can make $2,500 in fines. They're very excited. Just random thoughts out here. Yeah. I'm, it could happen again. John in the Den is saying Axon, which is the old taser company. And the one thing I want to find, and I've never been able to find for Beavis and Butthead, is give them the taser. I wanted to find that audio clip, and I've never been able to find it yet. Anyway, we'll move on. As I said earlier, Apple is the company that could get back to 205, and why it hasn't really dragged on the market so much yet. The next $10 down could. In fact, you could get down to $200, and that would only take you back to where support is in an Apple. But all the leaks so far just tell me that there just isn't much in what they're going to show. It's a lot about accessories, and people are interested in them having some kind of smartphone that thoroughly outclasses what Samsung has. And in fact, I think that at least for the next 4 to 6 months, Samsung is probably going to outclass Apple in that. The thumbprint reader that they had made a deal with for $500 million down in Texas is kind of interesting. I don't know how many people are thinking, hey, the thumbprint reader on the Apple is so much better that's the one I'm going to buy. I think people kind of already decided that, yeah, I like Apple, or I'm in tame Android or Samsung at the very high end. But that's interesting. Also had some emails. You can email me at path@tfnn.com. You can also, of course, put a message in the Den, or you can call me at 877-927-6648. I had some questions about NVIDIA and AMD and where they're really making their money. And, of course, they're making their money on these video cards and the video processors. You kind of up on light volume here today, but the question is, what's the split between NVIDIA and AMD? The split is that NVIDIA has about 70% of the market to AMD's 30% of the market. That used to be 65 and 35% about 6 months ago, but with the crash of Bitcoin and Bitcoin mining, right now you have to get about $8,500 to $9,000 to make money mining Bitcoins, and at $6,200, I think that's what it was before the show when I saw, there just isn't a lot of reasons to get into it. And I don't see any way, as I said last couple of weeks, I don't see any reason for AMD to be taking these kind of rides higher, other than the fact that everybody's smashing Intel. And is the reason that they're smashing Intel that they're long AMD and they want to push this thing up a little higher? Is there really that much more new business in AMD? Don't think so. I think the turn will come when Intel, NC, gets a CEO, or they get rid of some of the morons that they have on the board of directors. That being said, we're fairly close to support here on Intel. Now, one of the problems I see is a lot of these stocks did come down with a light volume, but Intel actually could be making a buy signal in the next few days. And it, of course, he went from 53 bucks to 46 bucks. You don't have that much farther to go to test this low, which is June 30th. That's $46.13. You had 35 million shares there. You got about 12 million shares now. So there could be some bottoming out here. Again, these stocks came down with fairly high volume, and normally I want maybe 5 to 10 to 15 days of going sideways for all the fast money people to get bored out of the stock, and that's generally when it's going to run. That kind of makes me think that my prediction is late September, maybe the 20th through the 30th, maybe the 25th, somewhere in there, that we could see a major low in some of these stocks like Intel and others. Problem with Intel is all they have to do is come out and say that they have a decent CEO. I think the stock could rally $5. But when that's going to be, hard to tell. We'll be back in just a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The Council of Economic Advisors are on the boob tube right now, and they may be giving a little bit of whip to this old nag coming around the final stretch. But just, maybe I'll change my mind if I see any volume or see any kind of move or actually any bearishness. But I don't see any bearishness in this market now, which means that I don't think that the broad indexes have hit any kind of low that I can buy. GNRC. I think a lot of people are familiar with this stock. I bring it up a lot about this time every year. In fact, the height of the hurricane season almost always starts about September 10th. In fact, this one's right on the mark, maybe a couple days late. I brought this up when it was up about $1, I think, this morning in the den. But certainly, if you're looking for fast money in the next few days as the hurricane rolls through, Generac Holdings, they make, of course, those generators that everybody needs once, of course, the power is out for weeks or months at a time. You know, we had a, what was it? How many days? 3,500 days without a hurricane hitting. Then we kind of got the first one, a little taste last fall. And now we're kind of back into that mode again. But you know, when you see this weather, keep a close eye on it, because as soon as it starts heating up, these things tend to run for 2 or 3 days. Then they pull back. If the storm hits, then you probably just want to stay long. If the storm starts to fade, then you can move on this one. But there's a couple of stocks that you should always know to go to if something happens in the weather, especially down here in the southeast. It's all about hurricanes. But always keep this one on your radar this time of year. An easy way to make a couple of bucks. I'll day trade this, not in my newsletters, but as I see fit, because the razors, this is kind of a razor's edge thing. You need to be able to be in and out in 5 or 10 minutes, and you certainly need to be there when the new weather forecasts come out, because you can swing on this one. You can swing $2 or $3 fairly quickly on a storm abating or getting worse. Other stocks in that sector, thanks to our friend John in the Tiger's Den, is United Rentals, URI. Nice little pop in that one today. This one's a little tougher. It's not such a pure play, but a nice move in that one. And of course, Lowe's and Home Depot, because guess what? As soon as that starts coming to your town, those towns get instantly, those stores get instantly rated. And Lowe's and Home Depot both have a deal where they can, in 36 hours, go to 200 stores, grab what they need, and move it all into somewhere where the hurricane would hit, or any kind of building supplies that go around disasters. So you'll always see these things pop a little bit. Again, risk reward probably not as good on Home Depot or Lowe's. I do like the pure play of Generac, GNRC, and the fact that it's feast or famine in this. What I would say is you got to be very nervous, because the water temperatures are not that great in the Atlantic. And even though the storm's building, it hits a patch of cold water, it could drop from a 4 to a 2. And I think that would probably knock $5 off the price of Generac if it ends up being a nothing. So just be aware, if you're doing the fast money crowd thing on Generac, that it's the best one to go to right up to the point that the hurricane hits. And then if it ends up being nothing, look for $5 down the next day. So, yeah, I'll kind of play it intraday. I don't think I'll hold it overnight. But an interesting play for the fast money crowds. Anything else out here? Go ahead and check my email. Somebody out here wants me to look at AMAT. I think we talked about that Friday and last week at length, so I don't think there's a lot be divined in the fact that other of these things are getting back into some open gaps. In applied materials, that open gap comes in at $38. That goes back to April 19th of 2017. And what was the low of that day? 38.55. So 38.55 to about 36.50. You want to keep an eye on for AMAT and the SMHs. Now you've come down again with energy, and just because you've come down and you've also hit support and volume turn lighter doesn't mean you're going higher. If the energy on the way down was light, most of the time you'll have a V bottom. When the energy actually increases to those lows, it's not uncommon to see a consolidation before you're moving up. So while we may have hit bottoms, bottoms don't mean you have to buy. Bottoms only mean that it's probably not going lower. If you're short, you cover, and then you wait for some kind of sign of consolidation, some kind of sign as the market's ready to move higher. But if they came down on energy, I've got to wait for some kind of consolidation. I've got to wait for a bigger signal. Volume just light at the lows is not a single reason to buy it. Can you get a couple bucks out of most stocks when they do that? Yes. But kind of the patron saint of price volume trading, his name was James Wyckoff. He called it an automatic rally. That is a rally that didn't have preparation and set up for a move. And when you actually do get that kind of preparation, that's when you get the huge moves. And why you try to stick with some of these stocks that have bigger patterns over months and years than patterns over minutes, hours, and maybe even days. Again, you can give me a call at 877-927-6648. There were a bunch of other stocks that I had in the newsletter this morning. I wanted to look and see how they were doing. So we'll go through those now. Yum Brands, of course, in China, one of the few stocks that I guess is doing okay. And of course, they've got their Yum China symbol also. But April 30th, $87.71 at 3.5 million shares. Friday had 1.4 million shares. Today you got 700,000 shares. Energy was okay on the way up from the July 2nd low, $77.09. But again, as we push higher today, the general market has very light volume. You want to keep an eye on that. When we come back, we'll talk about the incredible evil of Twitter being more evil again today. Evil each and every day, I think, is their new motto. Anyway, we'll be back with Twitter, talk about some other stocks too.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're back up 9 on the S&P cash when we go to the volume, 3.5 billion shares. So pretty quiet day so far, not a lot of volume. We did have some more energy on the way down. We're going back up. It is a Monday. My guess is we're probably going to kind of go a little sideways here until Wednesday and see what Apple has to say. But there's not a lot else out here, I think, that can change the tone of this market that we can know now. You know, maybe there's some kind of news that comes out that no one is looking for. But at the moment, I think starting to see some people maybe a little disappointed with Apple's last quarter of the year. And that, yeah, well, they have some new stuff. Does it really make the difference? And I don't know if it does. It seems to be underwhelming. Let me put it that way. I don't see that there's a lot of reasons why. Okay, Verizon. Oh, we were talking about Twitter. Twitter, of course, continued under pressure. Didn't have a lot of volume on Friday. My guess is Twitter's headed back to 2660. That's the April 4th low. There's nothing good about what's going on at Twitter. The CEO is not doing himself any good by telling him that, or telling everybody that he's basically decided that he's the arbiter of right and wrong, or good and bad. And some bad people on his site, or even if they're equally as bad, they can continue to be bad because he kind of likes how they are bad. Anyway, some algorithms are more or less biased than others. I think that's kind of, I'm going to say that is a semi-quote from him last week. The downside is that you're going to tick off half of America by doing something like this. And I don't know, Nike, is it going to end up being your father's Oldsmobile? I think that this is a real chance. Twitter deciding that they're going to control free speech, probably not a good idea long term either. And of course, nothing worse than both, or a lot of these companies going right out after the outright narcissism of their customers. Probably doesn't do any good to throw fuel on the fire of those kind of people already, and they're doing that. Anyway, I wanted to talk about Verizon VZ. Verizon got a little doji out here today. It looks like they're going to lose the driving force behind the company. That is Armstrong. He also may be a horrible narcissist, certainly a horrible individual. He's done a legion of stuff if you Google about it, but he did one thing right, and that is that he was able to put together a package and get Verizon to buy Yahoo and a lot of the other stuff. He wanted to do a lot of different stuff. Just because he's a horrible guy doesn't mean that you can't make money with him. Just let you know, though, that a lot of people are going to be more than happy if he fails and are more than happy that he's leaving. But what you have in Verizon, I don't see it as a winner yet. There's two classes of people that will make money in 5G in the coming years. Those are the people implementing it and the people that are buying hardware to implement it. The people that are building the hardware are going to be the first. Verizon, T-Mobile, these guys are going to have to spend enormous amounts of money, and that is not going to look good on the books of these companies long term. What you want to do is be able to buy Verizon, T-Mobile, Sprint, all those other companies after they've spent the money, after the stock is pulled back because they've spent all that money, and then get into the point where they're actually making money with new services. That may be a while. That may take several years where you see a T-Mobile or a Verizon under fire because of spending all that cash. I know that T-Mobile is spending a huge amount of money around where I live and putting up these 5G mobile sites and antennas and dropping fiber already. This is very expensive stuff, and the payoff is in 10 or 20 years for most of these folks. So wait until the market has absorbed the fact of how much money they're spending on infrastructure. Wait, I think, for the next few earnings cycles and see how the market reacts to it. Maybe they look past it. My guess is that they do not. Yep, the company is making equipment on the front end of this business. Probably the best company, I brought it up a few times, is Keysight. I do like some other companies in this sector. Unfortunately, they're either so mired in the bigger company that it doesn't matter, or you know what, Roden Schwartz, great people in the same sector, some other ones in the same sector, they're just not public. Or if they are, they're on some exchange that I'm not sure which one it is. But maybe someone knows if Roden Schwartz is public on some European stock market. But I'm not going to go chasing something on another one that's maybe harder to find. Keysight, of course, making a lot of this stuff. One of the guys in the den was consulting on it. But very interesting. This thing where it's just going a little sideways out here, I would still like this thing to get back down to about 63 bucks and a light volume test. And then maybe this thing is ready to go one more step higher. But look for ground zero, D-Day. I'll mix my metaphors here for about February or March of next year, because we're starting to see at least some implemented phones in 5G starting to hit the market late this fall. I don't think those phones are going to be any good. Most of the new technology, both from Intel and Qualcomm, looks like it's going to be in phones in the first quarter next year. And I think that's when we're going to start seeing a lot more of what I would call late to the party traders coming after these stocks. And they could hit and should probably hit their highs probably in that late first quarter, early second quarter of next year. There's a handful of other stocks out here that are interesting. Wanted to see how these things were bottoming. Tech Target, don't know much about this one. Came off of the highs, really light volume, but it's coming back into a 2.8 million share August 9th low with about 400,000 shares on Friday. Very light volume today, so it's one I'm going to do more work on. TRQ. Oh man, someone he's bringing up Avago. I dislike Avago because this is another house of cards like the what was the name of that company? Was it Valiant? I think they got a PE that's got like a dash and 19 zeros behind it or something. It's pretty astronomical. Not much of an Avago fan here. A lot of risk now. Enron kind of risk. Valiant kind of risk. Look back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question come in via email about Roku, and my opinion had stopped. Can this thing go to $100 or more? It certainly can. This is this year's version of GoPro. They have a technology that doesn't seem to have much of a moat. The software doesn't have much of a moat. I don't understand why there aren't, and there probably are 20 different companies doing the same thing. They spent a lot of money up front to get inside everybody's TVs. I don't know whether that pays off or not, but my thought is that it probably does not. Maybe I need to buy one and just play with it for a month or two, but I've kind of looked over what they have, and just at the moment, there's either two roads. Either, yes, this is the next Netflix and you've got to own it. But again, I don't see that they don't own the content. The technology isn't anything exciting. I guess the one proposition is, did they get themselves in enough TVs by paying up front, especially the less expensive TVs, where they're normally got their app in the TV? Is that enough? Right now, this is a stock that is perpetually, massively shorted. I think at this point, they may have more shorts in it than GoPro did at $70. But GoPro went to what, 110, 120 bucks, and at that point, you had to pay $15 to $20 to short it. That is, people would allow you to short it, but you lost $20 the minute you shorted it, being short. And a lot of people on Wall Street did it because they knew it. I don't know if there's going to be that much difference between Roku and GoPro. I think Roku has a little better opportunity than GoPro, but not that much. Watch it very closely. Play it on the day trade. Fine. In the meantime, sell when you can, not when you have to. We'll see you tomorrow.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.